Welcome everybody to the Pro Trader webinar series today with Vinny. We're going to be going through Coach Vinny's take on trading, what he looks at, how he trades, how he uses Bookmap and order flow. Vinny, can you go to the next slide?
Yeah.
Okay, so Vinny's a full-time trader and he won the blue jacket over here at the Bookmap competition last year. And then he expanded his role as a Bookmap coach after creating just excellent content for the Bookmap Academy, journaling his trades, and that is the path that we offer you to become. When you join the Bookmap Academy, you can go from Junior Academy to Bookmap Academy to Coach to Streamer. Vinny is a coach here, and he does a heck of a job over at the Bookmap Academy. He shares also his insights on Elliott Wave, Fibonacci, advanced options. He specializes in applying tools, Bookmap tools, to his fair value gap strategy, and actively mentors members of the Bookmap community. He looks at future stocks and options. Next slide, Vinny, and we'll just go through the disclosures and then let Vinny take it away. So, general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode if we trade, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so Vinny, take it away. Welcome. Great to have you. This is your first event over here at Bookmap. Great to have you.
Thank you, Bruce. Thank you, Dan. Thank you, audience, for having me today. I'm very excited, and thank you for allowing me to go ahead and present to everybody and sharing my strategy with everybody, and also applying it to the assets of Bookmap as well. So, yes, my name is Vinny V. And, Bruce introduced me earlier. I started with Bookmap back in 2023. I got the Blue Jacket Award in February of 24 of last year. And I became a coach this past spring in 2025. And so I've experienced in, Elliott Waves, Fibonacci's, and I've also done options with butterflies, vertical spreads, strangles, condors, etc. And my focus has been on the fair value gaps. Okay. And so some topics that we're going to cover today, just real briefly, is nothing really too in-depth, but just an introduction to a theory that I have and applying some knowledge of trading. Fair value gap strategy. Also, we're going to apply some of the Bookmap assets to this fair value gap strategy, and then we're going to go ahead and follow it up with a conclusion. Okay, so I have a theory. About 80% of trades are pretty much mechanical. We see a setup and we take it. For example, we'll have a trend break or higher lows, or we may see a hammer candle, etc. And so you will see the setup and we'll take it. And we can we live a happy life. We pay the bills. However, 20% are in the know, so they know why the setup develops. We want to become one of those. We want to become one with the traders and institutions. We want to trade in the zone, anticipate the next move. How does one go about gaining this experience? Well, we'll gain this experience through screen time, back testing. I believe Bruce has a program that he does. Well, a pilot program. I'm sure he'll expand upon it later. But for this, so what we're going to do is we want to go ahead and be that 20% in the know. So not only can we pay our bills, but we also want to go on vacation as well. So 90% of the traders fail. They are not in the know, and we want to be in the know, and we want to be that 10% that can pay our bills and go on vacation and be financially free. So one strategy that I use is the fair value gap strategy. I don't know if you've heard of this before, but just going to go just a real quick introduction on how I go about going about applying this, and I'm going to go ahead and just exit this real quick so I can go ahead and draw on this. This is your fair value gap. Just a real quick, it's a 3-candle sequence, okay?
Uh,
And
yeah, Vinny, I'm
yes.
sorry, I lost the presentation.
Oh, you can't see it?
No,
Oh,
it doesn't look like you're sharing.
you see it
Okay,
now?
okay, the slides are back. Yeah.
Okay, sorry about that. Okay, so yeah, so this is the fair value gap strategy. So we have a 3-candle sequence. Typically what happens, your middle candle, we have a really kind of explosive move, and we have, a bunch of institutions go about and get their orders filled, and the price moves up, and it comes over and hits liquidity, and the traders will go ahead and the institutions will go ahead and fill their orders, and they'll exit. Say it could be about 5 points. Bruce, are you able to see me drawing on this?
Yes.
Okay, so they'll go ahead and get 5 points. They'll hit the liquid. We're able to see the liquid right on the heat map for Bookmap, and then it'll start coming back down into some of the orders in which the institutions have left behind. All right. Also, what happens is, we'll go ahead and we may get some FOMO. We'll go ahead and place a trade, and we either get our 5 points here, and also there'll be some. You'll also go ahead. Your trailing stops will come up on over here, and you'll get them filled. So and then we'll also go ahead and we'll some of the traders, retail traders, will go ahead and move their break even up, and so they'll become green. So and they're happy with that, okay? But we want to think like institutions do, okay? So institutions will go ahead and place their order. The retail traders will get their 5 points, but the move happens so quickly that institutions will come back down and grab the rest of their orders, and then they'll go ahead and write it on up and get 7 points. And that's what we want to do. That's what we want to be. So does anybody have any questions about that? Okay, so let me move on to the next screen. You see this, Bruce?
Yep.
Okay, good. Okay, so how can we apply Bookmap assets to a strategy? Well, there are several ways in which we can apply this to, and one of the ways is using book flips, orders pulling lower or higher. We have liquidity that can act as support and resistance, and we can use it as targets as well. Okay, and so this is one of the posts. Are you able to see this, Bruce? The Bookmap post?
Yep, looks good.
Okay, good, okay. Yeah, so we have a fair value gap strategy over here. You can see that's painted in the orange rectangle, and we have a book flip. So I'm just okay. So you Bruce, can you see me drawing on this at all?
No.
No. Let's go ahead. I'm going to get out of this again because I want to go ahead and draw on it as well.
Maybe you can use the drawing tools from PowerPoint. Maybe that works.
Yeah, maybe.
I'm no
You see
expert
it?
in PowerPoint, but oh yeah,
It's
it's in red. Maybe you can make it yellow.
Awesome.
Yellow or
Okay,
white.
good. Thank you. All right, terrific. Good. Okay, yeah. So this is your book flip. Okay. So what'll happen is you'll have price will start coming down. Okay. It'll absorb these passive orders, and then it'll come back up, and then all of a sudden we start developing some liquid support right here. Okay. So this would be your book flip, and so as price moves out from the fair value gap, it'll come back down. Okay. And right where the liquidity is, it'll fill the fair value gap, and then this is where one would go ahead and enter. So why would you enter here? Because you have a liquid support. It's filling the imbalance for the fair value gap, okay? And then you can place your stop right underneath. So this would just be a 2-point stop, okay? And then like we mentioned earlier, this could be like 5 points, but we want to think like institutions. So this could be like 2 points, and we want to think like institutions. So we're going to go ahead, institutions, buy their, fill their orders here, all right? They'll get their couple of points and they'll come back down and get the rest of their orders that they missed. And they'll go ahead and take this right back up. And this is exactly what I did. I got this for 4 points. And so we'll target this liquidity right here. Okay, does that make sense? If anybody has any questions, please go ahead and type it in the chat. I think we have Bruce or Dan will go ahead and follow up with some of your questions, and we'll answer that after we're done with the presentation.
Yeah, Vinny, if you can just change the color of the pen, that'd be great, because it's a dark red. Maybe
dark red.
Yeah, if you can make it like a white or a light blue or something like that.
Light blue
or yellow or something. Yeah,
light blue better?
that's better. Yeah.
Okay, good. Okay, so here's our second example. So we're going to have a number of examples here that we're going to go through. This is another example. Price came down, okay, and then you just have to really be patient and then wait till a fair value gap develops, which it did. So this fair value gap developed here. Institutions will go ahead and buy their orders up. Okay, they'll get maybe a couple points here, 2 points, and then they left their orders, come up and pick up the rest of their orders in the fair value gap, and they'll take this higher. Okay, so this is what we're looking for. We're looking for a fair value gap, and we're using Bookmap assets to go ahead and find our target, which was up here for 4 points. Okay. Next one, same thing. Okay, price is coming on up. Okay, it's a liquid here for a couple points. Right, institutions go ahead and enter their orders. Fair value gap develops, comes back down, and to get the rest of their orders. And then we also, with the book, develops liquid support. Okay, so this adds conviction to my entry. I go ahead and enter, and I'll move it right on up and take my order, take my trade on up to this liquid target of 6 points. So instead of getting just 3 or 4, I'll go ahead and get 6. And so that is how I apply this strategy, as well as using Bookmap assets to go ahead and not only go ahead and have conviction to my entry when I place my trade, but also I target the liquidity above so that I can get 6 points. Okay, same thing here. Price comes up. Okay, hits our liquid, comes back down. We have a fair value gap that developed. Okay, so institutions will go ahead and fill up. We'll go ahead and get the rest of their orders that they have in place. And this is where I entered as well. And I'll just take it right on up to this target, okay, which was our previous high. Okay, for 10 points. Does that make sense to everybody? If you have any questions, please go ahead and type in the room. Bruce, do we have any questions from the audience at all that I may be able to answer right now?
See, Ellie is saying, understand what you mean by execute a trade in fair value gap, but what do you mean by hits are liquid?
Oh, you mean hits? Okay, then I must. Okay, okay. Can you please clarify that question?
So I guess they maybe explain a little bit about what you mean as your targets and liquid and liquidity.
Oh, I'm sorry. Okay.
And Bookmap.
Yeah, you're right. You're right. I'm sorry. Yeah. So liquid is what I'm referring to when I say liquid is passive orders on the book. So these are standing orders on the book that we're able to see through Bookmap assets. We can't see this in the chart. So, but that's also one of the assets that Bookmap has, is that we're able to see passive orders that are on the book that we can target for for our exit. Okay. I think that answers your question.
Yeah. It's just it's their limit sell orders above the market, limit buy orders down below, Ellie. It's just liquidity in the order book.
Very good. Yes. Simple terms. Good job, Bruce. Okay, same thing here as well. Okay, so this is also another strategy up over here that I went ahead and added on a bit of a chart. This is a fair value gap strategy. The price comes down. Okay, it's liquidity here, bounces back up, and also sweeps down here. Right. Liquidity, liquid support is developed in this area. And all I did is just follow this chart up over here regarding the fair value gap. So we moved up, develop a gap, and then it just consolidated in this area. And this is your discount zone in which I entered. Okay, had my stop down here, and I just took it right on up for those passive orders that are right on the book for 4 points. Okay. Here's another example again, okay, of a book flip. Okay, so price is coming down. We move up, and then also we develop some orders in the book here, and then this is what we call a book flip. And then we also have liquid support up over, liquid resistance up above. And we'll come on down, move out of the fair value gap, and I'll enter here. And just take it right down to the passive orders on the book for another 4 points. So this is one after another repetition. So yeah. Another one. So this is where we're taking this down now. So not only can we use our fair value gap strategy going up, but we can also use it going down as well. So here's another one. A price comes up. We have another book flip in this area. Okay. There's a gap in the fair value gap, comes down. I'll go ahead and enter in this area, and I'll just take it right on down to the liquidity and grab 3 points. Okay. Does that make sense to everybody? If not, please go ahead and put some questions in the chat, and I'll go ahead and answer that after I'm done with the presentation. Okay, another one. So you can see that you know, you really don't have to go ahead and place actual trades. You can go ahead and practice this on your own. In your own, in your own setup that you have at home. So this is another example. We have a fair value gap to develop in this area as well. Price comes down, moves up, just taps the fair value gap zone. We have liquid resistance over here, and then I have my stop up in this area. And also we talked about orders pulling lower. So this helped me develop some conviction as well to hold on to my trade because we had orders pulling lower. And price just went right on down to the passive orders again at 4.50. So I got 4.5 points out of this. So not only can we use the fair value gap, we have book flips. We can also see that we can use other bookmap assets such as orders being pulled lower. Okay, so now we're going to go right back again to our setup over here. Our example for fair value gaps is a 3-candle sequence here. Okay, we have price exploding pretty rapidly. It develops this fair value gap area. Okay, and we just draw one end of the wick to the one end of the wick here. And so this is our fair value gap area. So this is what we call our discount zone. Okay. So we want to go ahead and enter our trades in our discount zone. Okay. So yeah, right where the institutions have the rest of their orders. And then we'll take it up. And then what could happen here is we can have liquidity up over here. And we will just take our trade up until this portion, and that'll be it. You can also see this actually came back down and tapped it again, right? And then took price even higher. And that's a little more advanced. But yeah, so that's the fair value gap strategy, and also how we apply it to Bookmap as well. Okay, so we have our chart versus Bookmap differences. You know, a chart is a great way to locate fair value gaps. However, a chart can identify liquid targets, passive orders on a book that may leave a trader, you know, puzzled once a liquid target is hit, stalls, and then retreats. Okay. Therefore, Bookmap assets, when combined with fair value gaps, can be very, very powerful. So in conclusion, I want everybody to think like institutions. You know, we want knowledge, be knowledgeable. We have a pilot program within the Bookmap community that teaches knowledge and repetition, and backtesting uses Bookmap, okay? So we have a strategy, all right? A fair value gap strategy. Anyone who has a strategy can apply these Bookmap assets shown today. And our assets that we showed today are book flips, orders pulling lower or higher, liquidity for support and resistance, and then we also have our targets as well. Okay. Does anybody have any questions? If there are any additional questions after the seminar, please reach out to me via Bookmap Academy Discord room or send me a note at my email address. And I have some references here for order flow education for you all. And I'd like to go ahead and open it up to the room if we have any questions at all.
Yeah, we got a few questions here. So, okay, so I guess the first question from Oliver is about you covered it, but how you identify the fair value gap.
Okay. Let's go back to our slide. Oop. There we go. All right. So this is our slide for fair value gaps. Okay. Let me see if I can get a cleaner picture. Okay. Oop, didn't come up. Okay. All right. I'm not sure how to erase this, but yeah, let's just go ahead and go through this again. So a fair value gap is a 3-candle series that you have here. Okay. So you have your first candle, and then you have an explosion of the second candle. Okay. And then you have your third candle is the most important. Okay. So this develops the gap. Okay. So what happens is institutions they don't get all their orders filled because price moves up too quickly. So it creates this vacuum, this bit of a gap that they left behind their orders. So what happens is that the price will come back down. They'll grab some more of their orders. Okay. And then the next candle closes outside of the gap. And this would be a signal in which you can go ahead and you can either enter here or you can go ahead and enter here. Now there's a little bit more understanding that goes through fair value gaps. Sometimes what they will have is they call it a 50% encroachment in this area. Okay. So this is a significant area as well that you can go ahead and target as well as enter your trade here. And sometimes this is an entire imbalance between buyers and sellers. So what happens is price will need to come back down, fill the imbalance, okay, for buyers and sellers, and then take this back up. So there's a couple of ways that you can go ahead and enter this trade. You can enter it here, enter it down here, and then have your stop below here or here. So you have 3 ways in which you can go ahead and enter your trade here. Does that make sense? It's kind of complex, but I try to simplify it as best I can.
Yeah,
Do you have any other questions?
Yeah, that answers a few questions in here about the 50%, Damien, and others were asking about entry. So he's covered it here in this answer.
Okay.
That Shark is asking though about how you identify your discount zones or fair value gap on specific time frames or across multiple time frames.
Yeah, that's another good question as well that I didn't cover. But yeah, so you can go ahead and use this fair value gap strategy on different time frames as well. So you can apply it either on the 1 minute, 5 minute, okay, and also the 15-minute or the 1 hour. Typically, if you typically more are reliable or the higher time frames, the 1 hour, the 15 minutes, okay, and if they coincide with the lower time frames, well, then you go ahead and have a higher conviction. Does that make sense?
Yeah. What time frame do you usually kind of enter on, or what do you find, and what time of day do you usually find that this works best?
Oh, another good question. Yes. So what I'll go ahead and use is I'll look at the 1 hour. The 1 hour is usually uh, a higher probability of the trade working out is using the 1 hour, and that's a pretty powerful time to use. But I'll go ahead and use the lower time frames as well as the 15-minute, but mostly I'll go ahead and use the 5-minute. Sometimes the 1 minute lately because price has been moving quite rapidly these past few days. But typically I'll use the 5-minute. Correct. And what was the second part of the question, Bruce? Please.
Oh, time of day.
Oh, time of day. Okay. Yeah, that's another good question. Time of day is okay. What we typically have is what we call a kill zone time, and that's typically at the start of the open. So it'll be 9:30 Eastern time till about 11:30. So that's the most opportune time to go ahead and trade because that's where you have most of the institutions doing their trading. It's higher liquidity, and it has a greater chance for these fair value gaps to work out. So that would be the prime time in which I would go ahead and look at. Um, yeah, so for the New York Open, does that make sense?
Yeah,
Good questions.
yeah, sure.
Okay.
Let's see. Just one last question. I don't know if you have Bookmap up and running. Matthew is
Mhm.
asking about can you identify maybe one in Bookmap in the live market or in today's action.
Yeah, that's good. Yeah, I don't have that up right now, but what I did do, oops, what I did do here was I made a post last night. This was one that I did last night. Okay, yesterday. But you're right. That was a good question. I wish I did have Bookmap up, but I don't have that up right now. But yeah. So this is one that I used that I applied Bookmap last night. Um, yeah. Uh, so yeah. So the price came up. Okay, and it dropped down. Developed this fair value gap. Okay, last night. You can go back and check this time if you want. Okay, this is West Coast time. Right? Around 1600 local. Developed this fair value gap. It tapped the fair value gap and came back down and got the liquidity at yeah, right around 67.15. So I got 4.5 points out of that one. This was really a good one because it also showed orders pulling lower. So once I saw this, I found the higher conviction rate, and you can start seeing price was starting to consolidate in this area before it just really dropped. It dropped even further than that, but I only got 4.5 points out of that. But yeah, you can go back into Bookmap today and also look at the 5 minute time frame. See if you can go ahead and find. I wish I had an eraser. I don't have an eraser for this, but you go ahead and look for a 3 candle sequence like this, okay, and use a 5 minute time frame or even the 15 minute time frame. And even the 1 hour time frame. I actually saw a 1 hour time frame today that worked out pretty well. You'll see price in the 1 hour time frame. I'll draw over here. Price came down. All right. This is your 1 hour time frame, and then it bounced right back up. Okay. So I don't have that in front of me, but you can go in the chart and take a look at that as well. I hope that answers your question. So you have some homework to do. You have an action item once we're done. Go back and look at your chart today. All right. See and plot the 1 hour fair value gaps, just like with this 3 candle sequence, or even the 5 minute. All right. So once we're done, so that's your homework for today. Once we're done with our presentation. All right. Any other questions, Bruce? Are you there, Bruce? Bruce?
Can you hear me?
Yeah,
Oh,
yeah. Are you
okay.
there?
So yeah, sorry. No,
That's okay.
I think that about wraps it up. I think you pretty much got them all. And for people that have more questions about this, I think probably the best thing to do is uh, you can come over to the Bookmap Discord. You can ask Vinny. He's in the Bookmap Academy room as well as a coach. So that might be a good place to continue the discussion.
Absolutely.
Yeah.
Thank you for having me.
Excellent. Excellent. Thank you very much, Vinny. Great to have you.
You're very welcome. And thank you, guys. Thank you again.
Okay. All right. Bye bye.